My name is Dominic Danino, aka Mr. Rental Homes, and today we are live. And I'm joined today by James A. Brown from the Denver market, investor and real estate agent. Hey, James. Good afternoon. How you doing, buddy?
I'm good, man. I'm good. I'm
Cool.
We're starting this series. This is going to be cool.
Yeah, I think so too. And we've discussed kind of making this happen for 2024 to kind of get the word out on how we're helping people that can't qualify for traditional financing and agents as you are, right?
Yeah.
That have situations, that have clients that want to buy but can't buy. So as we know, 70 to 80% of people that want to buy a home can't qualify for traditional bank financing.
Yep.
For whatever reason, right? And banks tend to be inside the box thinkers. They don't like to get too creative. They're afraid to take any chances. And, there's a reason for that.
Their hands are tied, right? Like there's check boxes they have to follow. You're a lender, if anybody didn't catch that. So like.
Exactly.
Yeah.
So for those people that have, this is the first time they've seen us, heard us talk about rent-to-own homes and how our program works, can you kind of give a brief explanation as to how the program works? And then we could dive deep into how it works specifically for an agent and then for individual home buyers.
Right. Where do we start? Well, we're basically just helping people that can't get qualified by a bank. Part of our process is working with a lender and really understanding why somebody can't get qualified now and what it's going to take for them to get qualified in the future. And if they're a good fit, we can get into that, like who is a good fit. If they are a good fit, we go buy them a house, or we may already have the house, in inventory. And that's a misconception. A lot of people think, oh, there's this pool of homes that are ready to be moved into. That's usually not the case. Like we may have, and other companies will have properties on their website that are for sale on the market. And so we can dig into this a little bit more, but basically it's just, these are available. We can buy them for somebody. So that's one way of going about it.
Yeah, so that's one great point you bring up. So let's kind of dive a little bit deeper into that because a lot of people are new to us, to the program itself, and as you said, there's a lot of misconceptions out there, right? Because there are other companies that have their programs. Some of them are bigger companies. I don't want to mention them yet. And in a future episode, we'll dive deep into how those companies work and how our program is different than theirs. But there are some mom and pop, smaller investors that buy maybe off-market properties, and they're sort of fixer-upper properties, right? I call them junkie houses, right? No offense, but they're junkie houses. They're not bank-eligible properties, right? If an appraiser goes out there and an inspection needs to happen, those properties are probably not going to pass inspection. In the lender world, where I come from, those are going to be C5, C6 condition on the appraisal, meaning they cannot get financing, right? Mm-hmm. They won't meet conventional or FHA or VA guidelines to get traditional financing, right? So there are other investors or other companies that buy up off-market properties that are in these conditions, and they offer them on seller financing or some kind of terms, having the individual move in and fix it up themselves, right? Those are fixer-uppers that they move in, fix it up themselves. It doesn't have to qualify for financing because the investor or the company that's offering these properties has these properties in inventory, and they are the ones that are doing the financing. So the payments are being made by the person that buys it directly to the owner. In this case, it could be a company or it could be an individual. Right, we know a lot of investors that use this method. In certain markets, it tends to work a little bit better because they're lower price point markets. Not to say that it doesn't work it can't work anywhere else. But in certain markets, very low price points, some mid-tier, lower price tier markets. We know certain markets around the country, based on if you consider what's the average medium price point, certain markets, right? So we know high-end markets or expensive markets, maybe like a LA, San Francisco, Seattle, Denver, Phoenix is getting there, right? So you got some on the East Coast too. DC is a very expensive market. Miami tends to be an expensive market, right? And then there are other markets around the country, Midwest markets, maybe a little bit in the South, where that medium price point is. I see a lot of investors send me deals or properties. I'm on a lot of wholesalers and lists from around the country, and I see properties and I see stuff like 80,000, 100,000, 50,000. I'm like, what? Like, where are houses for 50,000? I see 30,000. I'm like, this is nuts, right? For us, it's nuts because we don't see anything. I mean, right? In your market and where I'm at, we can't find anything. You can't even get a mobile home for that, right? You can't even get a trailer for that, right? So there are markets out there, and this method that some investors use in those markets is, hey, I got a cheapy house, and you can make me payments, and people move in, and they got to fix them up themselves, right? So the beauty of our program is we don't do junky houses. Our houses are going to be move-in ready, like 99% of the time, right? Why? Because people are picking the house from the MLS, right? So if an agent, you as an agent, if the property is not in retail condition, you're probably not going to list it, right? Because you're going to have problems. Because a retail buyer wants to come in with financing. They want a move-in ready property, right? They don't want to be fixing it up. A retail buyer probably has a job and a family and kids. They want it ready. They want it all rolled in. They want it HGTV ready, as I call it. That they roll it all into the financing. They don't want to be taking their weekend or after work coming in and trying to fix it up and updating the cabinets and the flooring and painting. Not necessarily. No, the majority of people, if they have full-time W-2 jobs, they don't have time for all that. They're not trying to do that, right? That's somebody else, right? That's a handyman or somebody that's more hands-on. And that avatar of buyer is different. Yep. So the beauty of our program is people can actually pick out the house. So we don't carry inventory generally. We do find properties off market and so forth, but generally, no, we don't carry inventory. Say, hey, you get to pick the 3 houses that I got, and then that's it, right? That's not how our programs work. The beauty of it is they get to pick it, right? Obviously, it has to meet that they can afford it, right? We're also not going to put somebody into $1 million house when they can't afford $1 million, right? No. So we don't do that either. Yeah. Right.
That's why we go.
You pick it. Yeah, you pick it within your budget or what your income looks like, what your situation looks like, what your down payment looks like, and so forth. Right. So there is a vetting process to qualify for our program. Yes, there is. So it's not everybody gets a house. This isn't Section 8. This isn't a free house. This isn't a down payment assistance program. Right. This isn't everybody gets a house program. Right. This isn't Oprah. Yeah. Right. So. You have to meet some criteria, and you have to have skin in the game too, right?
Right. We're underwriting it, like a lender up front, but then we can be more flexible. That's where we're filling that need. Absolutely. But we have limits, like I said.
Absolutely.
We got to be able to afford
it. Right. Absolutely. So yes. So you brought up some great points as to we don't carry inventory. You get to pick the house, right? So when somebody picks out the house, and let's say in a year or two, they change their mind, they can't come to us and say, oh, well, you gave me this junky house and there was only these 3 that you had, right? It's like, no, you picked out the house. We didn't pick it out. We weren't intending on living in it. You picked it out. You're the one that agreed with the agent that showed you around and showed you all the houses that were within your budget. You picked it. We didn't, right? So that is an advantage or a benefit and feature, I guess you would say, of our program is you get to pick the house. I mean, it doesn't get any better than that. You're not getting a bunch of junky houses that we're carrying in inventory. So that was one great point that you bring up as far as the rent-to-own program. So anything else you want to add to that?
No. Should we dive into who it's a good fit for, or maybe like how agents that we work with?
Sure. So let's start with who's a fit for this.
Yeah. Self-employed people are usually a good fit. Banks don't like self-employed people. We're self-employed, and there's reasons. Riskier, you don't have that kind of steady job. So I get it. Self-employed people typically have some money saved up, but maybe they have a cash business, and they're just not claiming enough income, or they're writing off too much on their taxes, and they need to flip the switch on that. So that's pretty common. That's usually a good fit, as opposed to somebody that's got bad credit issues. That's a whole other thing we could dive into, is reasons why people have bad credit. But we can help those people too. People go. I like to say it's life happens to some people.
Yep.
They're not just bad with their money. They went through a divorce. COVID affected their jobs. Things like that. And as long as we see that they're on the path to becoming homeowners and be able to get a loan from a bank, they're kind of digging themselves out. That's who we can help.
Yeah. So let's touch base a little bit based on self-employed or business owners, right? Somebody's a business owner, self-employed, or somebody that, you can own a business, or a contractor, independent contractor, right? So like you said, we're self-employed, right? Agents get paid 1099. Brokers, lenders get paid 1099, right? The other thing that's also big these days is because of the way that the industry is, the economy has changed, right? So the old traditional way where somebody goes to an office or a factory and works 9 to 5 and gets paid an hourly rate over 40 hours, a weekly paycheck, and so forth, that's changed, right? That's no longer the case, right? There are so many more entrepreneurs these days, right? I mean, it's so popular, right? In social media, YouTube channels, it's like, hey, be an entrepreneur. So you can live the life of whatever, right? And everybody's got this dream to work for themselves. Everybody dreams like, hey, I don't want to work for the man, right? Nobody wants to work for the man. They want to work for themselves, create their own lifestyle, freedom, passion, whatever they're passionate about. So, right. So a lot of entrepreneurs these days, but they have a hard time documenting their income because people are getting paid through PayPal, Zelle, Cash App, Cash, right? All these ways that people get paid these days. So banks, right? Banks are old traditional. Banks have been around for, since the beginning of time, right? And they're all used to doing stuff the old way, right? So the banks are old school, as I like to put it. They like to stay within their comfort zone, right? So they want to document this and everything nice and tidy within the box. Well, people that get paid through Zelle, we talked about entrepreneurs. We talked about the gig economy, right? If anybody's never heard of that term, right? The gig economy is this. People that are Uber drivers, right? Yeah. Food delivery is huge these days, right? People that are driving through apps. So you have all these modern things that have come through the age of technology that people can either replace their old traditional income or the side hustle, right? Additional sources of income, however you want to call it, 1099, odd jobs, right? Handymans, all these people that are doing these kind of jobs that are not old traditional jobs, but they're getting money, they're getting paid, and they want to use that income to qualify. Well, most of the time the banks are like, I don't know, we don't like it. We don't like it, right? As soon as they see it, they're like, it turns them off, right? Now, there are a few programs out there that'll let you document alternatively, but the traditional lending programs like conventional, FHA, VA, USDA, they want a 2-year history documented on your tax returns.
Yep.
Right? If it's not on your tax returns, they don't count. Right. So as a general practice, if you're a self-employed, you're a business owner, and we were having a previous discussion about talking with a bookkeeper as we do our books and whatnot, right? The general practice or the good practice, a CPA or a bookkeeper is going to say, hey, have a business account in the name of your business separate from your personal account. So that way you can run all the income into your business account, right? And then run all the business expenses out of that. And then you pay yourself from that into your personal account, whatever you're going to draw yourself. And then at the end of the year, you can document for your CPA for tax purposes. That's the correct way of doing it, right? To stay organized right away. But obviously, when you start as an entrepreneur or you start a side hustle or something, you're not thinking about that. You're like, okay, I'm passionate about doing this, and I'm going to start marketing, and I'm going to get out there and do it. You're not thinking about the books. You're not thinking, because this isn't stuff that they teach you, right? When you're starting as an entrepreneur or a business owner, they don't teach you this, right? They don't teach you this in high school. Like, I mean, I got an economics. I went to ASU for economics. I mean, yeah, you take basic accounting, right? And then you take business administration, right? And some finance. But even people that are MBAs, they don't really teach you how to set it up, right? They teach you, hey, this is what the books should look like, profit and loss, income statement, right? But it's not, okay, yeah, that's great if I'm looking at it from somebody's else's perspective. But what about my own? How do I put it together, right? They don't teach you any of that stuff. So people end up finding out the hard way. It's like, okay, yeah, I got my side hustle, I got my business, I'm working at it for 2 years now, and I want to apply, and then you don't have all your paperwork lined up or whatever. The banks aren't going to look at it as you being bankable, right? As you're not ready for them to lend to you. So you have to look for alternative ways. And that is one of the type of people. And we get a lot of that. We get a lot of that people, yeah, they have good businesses. They're running a lot of revenue, $1 million of revenue, but they're writing off $1 million. Why? Because the CPA says, yeah, you want to pay the least amount of taxes, right? Yeah. They're doing it legally. There's nothing wrong with that. They're running $1 million in revenue, expensing $1 million, and they're netting zero from a tax standpoint. Right? Yep. A lot of it tends to be paper losses. And so the bank says, hey, you're broke on paper. We can't lend you any money. So that is one thing that they don't realize that happens all the time.
Yep. Happens all the time.
Yeah. So then let's talk about who else would be. So we talked about self-employed business owners, entrepreneurs, gig workers, right? Side hustle, those kind of people. What would be another kind of individual that would be a fit?
Well, that just triggered I got a call one day. Somebody was working for Lockheed Martin. Had a good job there, was getting a job transfer to Denver. And I get this call. They're like, we can't buy a house because they had like a primary residence and I think a rental property, and they were late on like 1 or 2 payments. Just clerical error, forgot auto pay was off or something minor like that. And they're like, the guy made good money and didn't want to move his family of 5 and, dogs and cats and everybody into a rental and then have to go buy a house once they could get financing from the bank. So that's where we come in. We can get them in the house. They can go pick a house and not have to move twice. I mean, that's a huge headache. With that I hear that all the time. So that's a case. Guy had a good W-2 job, but screwed up something. Just one checkbox.
Yeah. So people that are relocating, right? It could be relocation from a job. So let's say you're an engineer at, Motorola in Houston, and you get relocated to another company, but maybe the job isn't quite the same, right?
Yeah.
Well, when you do an application for financing, on your application, obviously you have to put your employment history. typically lenders are looking for the same line of work, right? If you're new to a new line of work because you got relocated, or hey, somebody gets laid off from one company, I gotta go find a job. Somebody offers you a job that maybe not quite the same. Maybe the lender isn't gonna be too crazy about it. Well, you don't have a history of this. Somebody that's a business owner, let's say, hey, I own I don't know, I own carpet. I have a carpet cleaning business in Denver. Hey, but I want to move to the warm weather in Phoenix, and now I'm going to start my company in Phoenix. Well, yeah, that's a different market. You don't have a history of having business or contracts in Phoenix. Let's say you contract with commercial buildings that you clean carpet. Now you're at a different location, right? You're relocating. These are the questions that underwriters, lenders are going to ask, right? Is this income stable? Is it predictable, right? Can we document it, right? These are the things that come up a lot of the times. And then you brought up the scenario where, hey, they got to relocate it. They couldn't sell their house fast enough, right? So as we know, people aren't selling their house as fast as we were a couple years ago, right? So time on the market for properties are taking longer, but somebody's got to go. It's like, yeah, you got to be at the new job in 2 weeks. I haven't sold my house. I can't qualify for the new one because I got 2 payments. I'm going to have 2 payments, right? Most people can't qualify with 2 payments, right? So this is a scenario where, hey, we're going to bridge the gap, get you into the house, and give you time to go ahead and sell that one. And then now that debt is gone because it's been sold, now you can come back and try to basically get new financing for the house at the new location that you're living in.
Yep.
Okay, so we brought up self-employed business owner, job transfers. Let's backtrack because I think you brought it up, right? I call it people that have life events.
Yeah.
Hiccups under credit, right? I'm not going to call it bad credit. It's hiccups, life events, because stuff happens. There's a phrase that I like to use. It's called bad things happen to good people.
Yeah.
Right? It's just life, right? People get divorced. Right? People have medical conditions. Stuff happens. People get into a car accident, and now you're out of commission for a month. Now you get behind. Maybe you're waiting for your employer to pay, I don't know, your disability or the temporary insurance when somebody gets workman's comp or something along those lines, right? Sometimes there's delay with that money, and you get behind on the bills, right? Well, if you did not know, if you have a 1 times 30 on your mortgage or rent in the last 12 months, you cannot get new financing for a mortgage. It has to be older than 12 months. So 1 times 30, that's all it takes. So you can't even refinance. So that happens. People get behind on the credit cards, obviously, if you get hurt. So we're talking about life events. What happened during COVID? Right? COVID affected a lot of people. They got sick, or I even saw some applications from people that were furloughed. Remember, some states shut down their factories, right? I had a couple of furloughed Tesla employees, right? They had to shut down now, obviously, we know from we follow Tesla and so forth. You follow the markets, right? Some of those factories were moved from California to Texas, but at the time when they were in California, those companies were those employees at those factories were furloughed, right? How about the UAW workers, right? The auto workers, right? Those factories got shut down because if nobody's driving, they don't need to build cars, right? That's what happened in 2010. So who's building the cars? Why are we building cars? Why are the factories going and nobody's driving? Because everything's shut down. Those people were impacted. They were furloughed, right? And then in some places, right, say you're a business owner and you got a restaurant. And if you were at a location where your area was shut down and you couldn't conduct business, that took a while to get sorted out. Initially, everybody got sorted. Then over time, maybe in 6 months down the road, or the city's kind of lessened up on their restrictions and said, okay, Now, instead of being able to fit 100 people, you can fit 20 people because the tables are separated. We saw a lot of that. Or now you can have some tables outside, right? I saw a lot of that.
Yep.
A lot of parts of the country during that time period where I got to go around, and everybody was doing their own thing. It was by state. It was by city. So everybody was kind of doing their own rules, basically. So people were impacted by that, right? Yep. Stuff beyond their control, right? It wasn't that they wanted to be late. It wasn't that they didn't want income. This is that they weren't performing their job or didn't want to perform the job or quit their job. It was just stuff happened, stuff that we don't know that could happen, right? Yep. So those life events, people with hiccups in their credit. Unfortunately, we see a lot of divorced people, right? So one of the things that tends to happen is people get divorced and they're not happy with each other. Nobody wants to pay the credit card bill. They're blaming each other. They're mad. They get emotional in that aspect. And like, no, you pay. No, you pay. No, you pay. No, you pay. And nobody's paying it. They're making money. They got jobs. But no, they kind of, as they say, cut off their nose to spite their face, basically. And they end up messing up their own credit by default because they're mad at each other and going through that process of divorce and bickering over who's responsible for what and who gets out of the favorite couch or whatever, or the dog or the cow, right? So those people end up doing this to themselves. And then once that's sort of settled, it's like, oh, yeah, now that I'm divorced, okay, he or she got the house. I need my own place. I can't get financing because you just messed up your credit, right? Yep. Yeah, but I got a job, and out of the settlement of divorce, I'm entitled to this, or this is my assets that I was able to keep and we were able to sort out through the divorce. So I have the money, but my credit is shot because we had these issues while we were going through this process. So a lot of people like that. So we give them the opportunity to kind of get into a home today, until we can get that sorted out, cleaned up, right? And basically, when it comes to credit, you just need seasoning a lot of times. When we say seasoning, is the older the derogatory item on your credit is, the less impact it has on your score, right? I just talked about like being late on your mortgage or rent, right? So I said any 30 days within the last 12 months has an impact. Now, if it goes over 12 months, right? So you got to make on time payments for 12 months. And then now the lender say, okay, it's over 12 months. Now you've kind of shown a history of being back on track. Now we'll lend to you. Well, same thing is with credit cards, or you got late with your car payment. And okay, yeah, I got behind, but now I'm back on track and we got it all sorted out. We just need to season that and make it older and older and older. The older it is, the less impact it has on your score, brings up your score, and then lenders will look at you again. So, yeah, so you brought that up.
Yeah. Hey, I wanted to show, I got this book, Best-Selling Options in a Divorce book.
Oh, nice.
If anybody's interested going through a divorce, knows somebody going through a divorce, it's got some good information about the process, things to think about ahead of time so you don't end up in a position where you can't go buy a house. So,
yeah, this is an opportunity to kind of still get into a home, even though you kind of, went through some troubles there, figuring out your credit situation, who's responsible for what, while we let those items get older or have them resolved, fixed, right? So that obviously that's upon you as the individual that has these credit items to work through those problems and either make arrangements with the companies, pay off all collections, credit repair companies. We know several credit repair companies that'll help you get that sorted out and so forth, right? So that we can refer you. So while you're doing that, you can still get into a house. And then once you're credit ready, then you can get your own financing. One last group that tends to be a fit for this that I work with a lot too is people that are sorting out their immigration status. Mm-hmm. Right? So they're in the process of working through their immigration status. As you know, when you're submitting documents to the government, those timelines, they may tell you, yeah, we'll review it in 30 or 60 or 90 days. And sometimes it tends to run a little bit longer than that, right? And those are things that are beyond your control as either an applicant or as a lender or even as an agent, right? So your buyer says, yeah, I'm working on this and I'm trying to get my immigration thing so I can qualify for traditional financing. Okay, cool. How long is it going to take? Yeah, the lawyer told me it's going to take 2 weeks. Or INS, I called them and they said, yeah, you should be getting something in the mail for 2 weeks. Well, we're at 4 weeks now. It hasn't happened, right? So beyond your control. And so we can give you we can be a bridge for people like that too, that are working on that. It's going to take them a little bit longer. And I want to share a scenario that we ran into.
Yeah, I got one too.
Well, there you go. Go right ahead, and I'll talk about mine.
Yeah, so this is in Florida, a family from Honduras. They're ITIN buyers, ITIN. They don't have a social security number. They couldn't buy a house. They needed more. They had a good painting business, made good money, but they just couldn't get a loan. Let's see. They basically needed 2 years to get everything all sorted out. And one thing about ITIN buyers, they usually, when you can confirm this, usually have to put down 30% or more, right, Tom?
Yeah, so there are a few programs out there what we call non-QM programs, meaning non-FHA, non-conventional, non-VA, non-USDA, right? So, So the big four are what I call the conforming, and then everything outside of that is non-conforming or non-QM, right? So there are a few lenders out. There are some lenders out there that will do ITIN loans. However, those ITIN loans, so it doesn't mean, okay, you have an ITIN, you get a loan, right? Even though you may have the down payment for those programs, they still will require documentation of income. They still will require a minimum FICO score. They still will require, you got to have at least 1, 2, or 3 trades. When we say trades, is payment history, right? Accounts that have a payment history of at least 12 months. Now, it could be a cell phone bill. It could be a local jewelry shop. It could be any of those, right? It could be, a department store credit card, right? So, but they still will have a requirement. So sometimes people, somebody says, yes, I'm on ITIN and I have a down payment. Oh, but I don't have a credit score. Because I don't have any credit because I haven't taken out because I didn't know I had to take out.
Yeah, no credit's worse than bad credit almost.
Well, in this instance, it happens to be, right? So yes, there are programs for ITIN borrowers with a minimum of 15% down. I think I know of one that'll do like 12.5%.
Yeah.
But the pricing is higher. Pricing is going to be higher because they assume a higher risk, right? But they still have a box also, right? So they may not be lenient with your income, as you mentioned. So somebody that's has a painting business. Well, maybe they aren't documented, or maybe they don't have a business bank account that the way they're documented. Maybe they're all getting paid through Zelle or Cash App or Venmo or PayPal, right? And they haven't documented that. So just because they're ITIN doesn't mean that they're going to get a loan from those programs, right? So they still have a box. They still have to qualify under those guidelines. But yes, there are some ITIN loans out there. And if you have questions about that, you're more than welcome to reach out to me and kind of give you more details about that. But yes, definitely. So go on with your situation, right? So there were painters, or they had a painting business. It was going to take them a couple of years to get their documentation completed. So that let's dive a little bit deeper on that. How did you hear about that, or how did you get involved?
Another agent that I know in that market.
So another agent reached out to you and knows, hey, I know you guys do this, and I have a client that isn't a fit for traditional financing, but could be a fit for your rent-to-own program. What do I do?
Yep, that's exactly how that happened. Yep.
So you want to kind of dive deeper into that. So they reached out to you, and then how did you work that out with the agent? why would an agent bring something like that to you as another agent when they're going to say, hey, well, you're a competing agent. I want to get the commission. Why am I bringing it to you? You're going to steal my commission.
Yeah. Well, they would get zero commission if we weren't working together, right? That's somebody that they would have to put on a drip, call them once in a while, maybe send them to credit repair if that was a problem. Like they're going to have to wait, right? But if we work together, we're not competing against each other. We're working together to get them in a house now, and then that agent gets paid now. So it's a beautiful thing.
Yeah. So as an agent, for agents out there, right? So the beauty about being licensed as an agent, even though maybe you're not licensed in Florida, right? Somebody else is, but the fact that you're both licensed, you can do a referral fee, right? So your broker, their broker sign a referral fee form, and you outline what are the terms of the referral, right?
Yep.
And you kind of work out those terms, and then it gives them an opportunity to get paid money now versus potentially losing a client to maybe another agent that has a solution, right? How about they would lose that client and say, hey, we got another person that we know in Florida that does our rent-to-own program. And then this client sees their social media or their marketing and say, hey, you've been turned around by a lender. I got a rent-to-own program to get you to a house. Now that agent could have lost that buyer to that agent that knows how to do what we do.
Exactly. Yep.
Right.
Yeah. And they become the hero, right? We're all heroes because we got them in the house now. They didn't have to go rent. And that's another thing. I get calls all the time. Oh, my landlord's selling, or they want to move back and we got to move. Now we got to go find another rental, but we want to buy, so boom, we can go buy them a house.
Absolutely. Yeah. Yep. So, so thanks for sharing about that particular scenario, right? So on mine, for somebody that was working on their immigration status, so as a lender and an investor that runs our rent-to-own program, so I share with other lenders, right? So you talked about how you got your lead from another agent who would think, oh, you're competing. I got my lead from another lender.
Yeah.
Right. In this scenario, it's funny, right? So, but they didn't see it as competition, right? Why? They didn't see it as competition. Well, in this instance, they had a client that was trying to apply for a traditional loan. They were waiting for their immigration documents to get approved, right? So the agent made an offer on a house thinking that, and the borrower and the lender, that they were going to get that documentation in time before closing so that the loan could get a final approval. And as we call in the business, a clear to close. So that way the funds can make it the title and so forth. Well, that didn't happen. As we talked about earlier, nobody's got control over what the government is doing and how long it's going to take them for review. And even though their attorney or the people at the immigration office will tell them, yes, you're going to get it in the mail. Well, sometimes that doesn't happen. Right. So this client had a property under contract. They had money in escrow, which it was at risk because if they didn't close, they were going to lose it, especially during the times we know when the market was super hot. Right. And you were having to put significant amounts of money in escrow to have your offer accepted.
Mm-hmm.
Right. They weren't taking $1,000 or $500. Right. People were putting 5, 10, 15, 20,000 in escrow, and that money's at risk, right? If you don't close, that earnest money goes to the seller. I'm sorry. It goes to the seller, right? So they may end up keeping the escrow money because you didn't perform, right? So since this client had money at escrow, it was 10 days from closing and it just wasn't happening. So this lender reached out to me and said, hey, I know you guys do a rent-to-own program. And I need help. What can we do? So basically what we did is we said, okay, we'll step in as the buyer. Now, why would we want to do that? Well, because we're stepping in as the buyer, and now we're making an agreement with the individual that doesn't qualify for that financing. Now, why would a lender send that to me and say, why would they lose that deal, as somebody else would say? Well, they're not losing the deal to me. The benefit of working with me was that they were able to perform to their partner agent, right? So as we know in this industry, agents work with certain lenders and vice versa. Lenders get their business from certain agents, right? So it's a partnership, right? So if me as a lender, you're my agent, my referring agent, and I don't get your deals closed and I don't get your borrowers approved, that means you don't get paid. Are you going to be very happy with me? No, right? Right. That's the way the business works, right? Lenders get referrals from agents, and agents are counting on the lenders to complete the process, get their borrowers approved so that they can get their loans, so that agents can get paid, right? Yep. Agents are worried about getting paid, and there's nothing wrong with that. But that's kind of the general flow, right? That's the relationship between lenders and agents. Well, if this lender who had committed and promised this referral agent that they were going to be able to close and it was going to get done, has to go tell that agent, you know what? Never mind. You're not going to get paid on this deal because I can't make this happen, right? Mm-hmm. That puts that lender in a bad position, right? Now maybe they lose a little bit of credibility. Maybe they're not going to get as many deals because now that agent's going to say, you're blowing up my stuff. You're not getting it done. I'm going to start sending it to somebody else. Right? Oh, yeah. So we step in as the hero, but they get to be the hero too. Yeah. Right? Because you know what? They can go to the agent and say, you know what? Hey, this is what's happening. I can't make this happen, but I got another solution for you. Right? Yep. So in our transaction, we step in as the buyer. That agent still gets a commission. Now, so we have two agents in this process, right? We have the listing agent and we have the buyer's agent. Mm-hmm. So the buyer's agent is the one that referred the borrower to this lender. Well, let's just say that if that agent has to go, if the buyer's agent has to go tell the listing agent, hey, this ain't happening because we're getting turned down, or my borrower's going to turn. That listing agent isn't going to be happy either. Right? So we got two agents that aren't going to be very happy because neither one is going to get paid, right? So we get to be the hero. The lender gets to be the hero, and the agent, the buyer's agent, gets to be the hero too, because you could be honest, and they can say, hey, listing agent, look, we're having problems with this lender, but we got a solution. I have another buyer that's going to step in as the buyer. We're just going to assign the contract to them. They're going to close. Your seller is going to be happy with you because the house got closed. They don't care who buys it, right? Whether it was the original buyer or somebody else, as long as the agreement stays the same, the price stays the same, everybody gets the money that they thought they were going to get, right? So that agent is going to be happy because they don't have to go explain it to their seller. Oh my God, that deal fell apart, right? And now they got to start all over again, right? They got to go relist it. Right, even if they got to keep the earnest money, sometimes that's not even worth the hassle, right? No. They got to go put it on the market again and start the whole process again with somebody new, making an offer, going through the appraisal, going through the inspection and all this stuff, and it just delays and delays and delays. So in this instance, we step in as the buyer, right? So the LO gets to be a hero. The buyer's agent gets to be the hero with the listing agent, and the listing agent gets to be the hero with their client, right? Their seller. Say, hey, that deal sort of it's not working, but we got something. We got another solution. Somebody else is just stepping in as the buyer is transparent to you. Nothing else is changing. We just got to update the contract, the assignment agreement. It just changes, right? The name of the buyer just changes, right? And so we get to step in. Everything happens the same way, and everybody wins. Right, it's a win-win situation for all of us. Yeah. Right, so that's how I can get a referral from another lender. Yeah, that lender gets to save that relationship. Two, with lenders, I tell them, hey, you bring a deal to us that the borrower qualifies, that we close on. That client that didn't qualify today is going to need financing, maybe in a year, 18 months, 24 months, 30 months, 36 months. When they're ready to go And you, as the lender that brought that client to us, you really should be following up with them anyways, right? Whatever that was keeping them from, you should have them on your drip system. You should have some method of following up with your clients that you can't qualify right now, right?
Yep. That's a solid lead.
Right? You got a loan right there in your pipeline that's going to close because they need it.
They have
part of our agreement, part of the process of our rent to own program is for them to get their own financing. This isn't a rent to rent. This is a rent to own. So they have to be willing and want to own the house and get their financing in the very near future based on what's keeping them from qualifying now. So you, as a lender, if you bring that deal to us, we send them right back to you. You're going to get a loan from that. The loan that you were intentionally thinking you were going to get, well, now you're going to get it. It just took a little bit of time, but at least you got to save the relationship. Two, you have an extra deal on the pipeline, and you're going to get paid.
Yeah, just got to stay in the business. By
getting creative.
Getting creative like we are, right?
Yeah.
There's a lot of lenders going, well, how am I going to stay in business? And if they get creative and have a tool in the belt, they can stay in business and can get that loan down the road.
Right.
Yep.
Right. And think of it this way. I tell other lenders and say, hey, look, one, our relationships are important because, as we've gotten away from the refi market more into a purchase business, then your relationships with your agents are super critical for you to stay in business, because that's going to be your bloodline, right? That's going to be what's going to keep you in business, what's going to keep you paying the bills.
Yep.
So if you're saving relationship with your agents by offering another solution, what do you think that agent is going to say? Hey, right? Less fallout, right? Less issues with or agents not getting paid. Well, if James, if you're an agent and I'm the one that's bringing these kind of solutions, I say, and I'm honest with you, right? We have a relationship. Say, like, look, I can't get him close on this, but I got something else. Do you really care? You care, but you care that the deal closes too, right? Because you put in the work, right? You spend all this time showing them houses, right? Yeah. It takes a lot of energy. It's not easy, right? Agents that are doing this, it's not easy. One of the toughest things to do is spend all this time, maybe 30 days, 60 days, even 90 days, showing somebody around, find the perfect house, get it under contract, and now the deal falls apart. Now you wasted all this time. Yeah. Yes, there's a relationship that's built, but you still want to get paid for the time that you put into getting this deal put together.
Heck
right?
Yeah.
So me as a lender to you as an agent, if I say, you know what, I can't get this deal done, but I got another solution, and that you're still going to be able to get paid. How much more valuable am I going to be as a lender in our relationship than Joe Schmo lender that works at ABC lender or whatever else, right? That doesn't have this solution.
Yeah.
Right.
It's huge.
Huge. Right. So you're gonna know, hey, if I bring it to Dom, it doesn't matter. He's gonna have something, and if he can't get it done, nobody else is gonna be able to do it.
Right.
Right. So he's gonna be a one-stop shop for me. Right. So that is the selling point. You as a lender having this other option working with us, you're gonna be able to sell or share to your real estate agent partners.
Yep.
All right. So we discussed what is rent-to-own homes, who do we help, and who's a good fit, right? And we talked about a couple of scenarios under these conditions that have been a fit, that we've been able to help people get into a home, and also have every party in the transaction have it be a win-win for them, right? From the agent to the listing agent, right? From the listing agent to the buyer's agent to the lender, right? To the client, right? To the homeowner, right? How much better does it get than that, right? Yeah. Everybody gets what they want, right? Everybody gets what they want. It's just a different way of doing it. It's a creative way of doing it. It's a little bit outside the box. And due to the market conditions, if you're a lender or an agent and you're not thinking of creative ways or thinking outside the box and getting out of your comfort zone of doing things the old traditional way, yes, you can still do the old traditional way, but you can add something else too, right? This is going to create more opportunities for you, right? In this market where every opportunity, every lead is valuable, right? We always say monetize or make sure that you're maximizing every lead, right? And then, so you take a lead and do they fit here? No. Do they fit here? No. Do they fit here? No. Okay, now we got something, right? You got to be able to maximize every lead, right? And working with people like us that kind of think a little bit outside the box. We're in we've done the creative financing space. James as an agent, me as a lender. We can kind of brainstorm some of these solutions to come up with some creative ways to still make a deal happen and have it be a win-win for everybody.
Yep. Love it.
So now we're about 50 minutes into this live, right? We talked about a few topics. I don't think we want to overwhelm everybody with tons of information. So I think that gives people enough to kind of ponder and think about and kind of nibble on, right? Until maybe next episode that we go live again. But there's some additional topics that we want to cover and then bring up more scenarios for people to understand how the program works. And then potentially, as we are live, right, people can ask questions. Yep. So punch in your questions. And then we can run through scenarios, what would be a solution, and maybe eventually have a conversation, book a time, have a conversation on the phone. So we can dive deeper into your scenario if you don't want to be too detailed or if you don't want to share too much. But as general, we can address some questions as things come up. So in closing, James, anything you want to add as to what we discussed already?
No, we covered a lot of ground there. So the fire hose will kind of spread out the streams and break out different topics. So this is going to be awesome.
Yeah. So we got a lot of tidbits to cover, more scenarios, and then kind of getting people to think a little bit differently, right? Yep. Of if you're open to the possibilities or open to looking at things a little bit different, then you're going to be able to benefit from what we have to offer.
Yep.
All right. So in closing, James, you want to tell everybody how they can get a hold of you? Give us your socials, social media handles, phone number, if you want to share that, your website. So people want to reach out to you and kind of discuss the scenario or just say, what's up?
Probably easiest thing if you're looking at the screen, go to Linktree. It's linktr.ee, then / partner with James Brown. Linktree, partner with James Brown.
All right. Excellent, James. So I appreciate you being on, and then I'm looking forward to having you, as we talked about, we're going to do consistent lives, bring more info to the people out there, because we really do need to get the word out because the market has changed, and this is just going to create an opportunity for people to benefit from not just home buyers, yes, agents, yes, lenders, yes, right. So these are all the people that can kind of benefit from what we do. All right, everybody. Thank you for spending another 50 minutes with us today on this live. Again, my name is Dominic Danino, aka Mr. Rent to Own Homes. If you want to follow me on social media, I am on IG as Mr. Rent to Own Homes. I'm also on TikTok now, so I got a TikTok account. I never thought I'd be on TikTok. I won't be doing any dancing, but I will be on TikTok at Mr. Rent to Own Homes also. My YouTube channel is Mr. Rent to Own Homes. And my website, as you can see on our banner, is rent2ownhomesus.com, where you can see how our rent to own program works. There's a video explainer halfway on the homepage that kind of walks you through the process. You could enter your info on there if you're interested in our program, and it asks you a few questions to fill out. Then we can reach back out to you and kind of go over your scenario and see how we can help you. Or if you're following me on any of the socials, you're more than welcome to DM me on there. I am also on IG at the Nino Capital Properties, and that's where I am live on IG. Hopefully the IG worked, right? Because it looks like Instagram is having some issues when you're streaming on there using StreamYard. So hopefully it went live. People saw us. People popped in. Anyways, that's it for today. Thank you again, and look forward to seeing you all and doing this again next week. Take care. Bye-bye.